Hey everybody, we're back with the latest San Diego market info. And as often the case in this ever-shifting market, the month-over-month data is painting a different picture than the year-over-year data. Let's get started by checking out what's happened over the past several weeks, and then we'll zoom out and look at yearly trends.
Yes, okay, so first the zoom in, month-over-month numbers. January new listings were at 2,034, so we started the new year with fairly healthy amount of new listings, and then in February that dropped 8.6%.
And those new listings, most of them went into escrow too. We had a boost in pending sales, as you can see there.
Yeah, exactly. So new listings down 8.6% and new escrows up, or new pendings up 4.8%. So that right there is definitely causing price stability, upward pricing pressure, etc. Closed sales are up 15.6% from January to February. And, I don't know if our friends at the UT are going to report that giant jump in closed sales or not.
Yeah, you may have seen the recent UT article about how closed sales were way down in January. And they were, but what the UT did not mention is that pending sales went way up. And that resulted in closed sales in February.
Right, and the other fact that the UT didn't mention was the anemic rate of new listings. Just
supply and demand, low supply.
Right, but it made for a good headline. Okay, so month over month we are up, and this is I don't make many predictions, but I did predict that we were going to see. I'd have to go back. I believe I predicted we'd see at least a 1.5% jump, but I can't remember exactly what I said. But just given,
we'll get back to you about that.
Yeah, given the activity that we had in January, we definitely saw an increase in pending sales, leading to price stability and upward pricing pressure.
January was a big month, leading to closed sales in February were big.
For sure. Okay, so let's turn off this chart and let's have a look at new listings, which are just way down year over year.
Yeah, so we've got year over year trends here. I like to look at this long chart. If you go down there, and you can see how, at the end, there's kind of a seasonal trend. At the end of the year, it dips and then bounces back, and it doesn't seem to be bouncing back the way that we would hope. But
no, yeah, generally you see, and you can see it here, the January bounce, there it is, there big time there, really big January bounce there. This January we had a bounce, but then what usually happens is it continues into February, which this year has not. So new listings are down, and that is really kind of the name of the game here, because we got more pending. Well, okay, let's move over to
let's move on to pending sales.
Pending sales. Okay, so again, pending sales are way down year over year. But when you consider the difference in new listings, there are just less listings to
low volume overall.
Yeah, right. Less listings to sell equals low volume. However, pending sales, definitely up from January to February. So that will lead to more closed sales this month too. So yeah, pending sales definitely lower. However, they are outpacing new listings. And a lot of this, I think, lack of new listings are just people sticking in homes because they've got that low rate and they don't want to lose it.
Yep. Well, let's check out closed sales.
Closed sales, right. So yes, closed sales are way off. Again, year over year, but like we keep saying, it's just an overall low volume. When we look at last year, you see that closed sales were off a little bit in March from the previous March, and then they got worse in April in terms of being off, and then a little worse, and then a lot worse in June and July. Things started to recover a bit in terms of closed sales, and then down again, leading to January, according to the Union Tribune, being the lowest amount of closed sales in 35 years.
And from what I can tell, that's true. They just didn't mention any other metrics such as pending sales, which were up.
Right. They chose to focus only on that. But if you really want to focus on something, UT, get back here and talk about this. How come?
Yeah, are you going to talk about when they go back up?
Right.
Because we had a big month last month as far as closed sales.
They're all about giving us bad news, but not always good news.
Well, let's see. Maybe we're being too.
Yes. Maybe they'll come back and do it. So median sale price, which as we already said was up month over month, really, if you look at the yearly trend, dead even. I mean, it's dead even.
And right now we're off about 10% from the peak of the market, which was last year around April, I think, when the median price of a single-family detached home hit $1 million even.
Right.
So we're down about 10% from that, back to where we were this time last year.
Back where we started. And both 22 and 23 are, up significantly from 21. So that's sort of good news for homeowners, equity, all that kind of stuff. All right. So why is some of this stuff happening?
Why?
Why? Okay.
It's because of this.
Rates. 6.73% is not good.
No.
That's a really terrible interest rate when you consider what's happened in recent history. It's better than 7.08 last summer.
And if you look at the chart from closed sales, closed sales were down when rates went up. So there's kind of an inverse relationship between the rate increases and the closed or pending sales, pending and closed.
And a lot of the explosion in pending sales was happening in here when rates were down. Although we're still we're getting into like for instance the week ending February 16th, February 23rd, rates are at 6.5, and you still have an increase in pending sales, 4.8%. So the rates are slowing things down, but they're not stopping people from getting out there and buying. So 6.73, if we continue here, we're going to start seeing again, buyers needing rate buy down, closing cost credit, that kind of stuff to get these rates down, to get things more affordable. That is, if new listings were to pick up. With no listings to buy, the current amount of demand seems to be supporting prices. So
people are staying put. They've got their good rates and they're hanging on to them. People are moving, but only if they have a good reason that they need to.
Yeah, for sure. So yeah, that's what's happening in the market this month. A lot of mortgage folks had predicted that rates were gonna get down. They were gonna get down.
This is the opposite of getting down.
Yeah, this is the opposite of getting down.
Not a good time.
Yes, get up, get down. So yeah, they're up, and a lot of mortgage folks were predicting that rates would be far more stable this year, not volatile. We're seeing a little bit of volatility, of course, not as much as we did last year, but unfortunately, volatility, here in the sixes, going up from, they got down to a somewhat acceptable level, and now they're higher. And the Federal Reserve recent comments would indicate that maybe we're not going to see rates getting down into the low fives as might have been predicted.
Yeah, the Fed is fairly hawkish right now given the latest inflation data, and we've got a new CPI report coming out, I think, next week. We'll see what happens with that.
Yeah, so I don't know. I think the Fed...
It's complicated.
It is complicated. I just wish maybe they'd chill for just a quarter, just see what happens. How much harm could it do just to hold off for a couple months?
Well, unfortunately, Jay Powell never asks us. So.
No, he doesn't ask us. Anyway.
All right.
That's what's happening in the market.
Okay, are we done here?
We are.
All right. Well, thank you for watching. We hope you enjoyed this. If you did, please like, share, subscribe, leave us a message in the comments. We'll continue to keep an eye on things, and we'll see you next time.
See you later.